Good day to one and all. This is Dr. Sivaraman of iknowindices.com. It is a new month and a new week. So we will have Asian session live market analysis. I'll display the slide. Asian session live market analysis on November 2nd between 5 and 5:30 GMT. This is Dr. Sivaraman of iknowindices.com presenting a simple market tracking technique using the live market code page. The link is given here and I'll also give it in the hotcom window. You can open the link in a browser and view where exactly the market is. So this is how it will look, the live market code page. In the live market code page, you come across the currency symbols on the first column. In the second and the third columns show the current market price, the bid and the ask. There is a spread between them and it varies depending upon the type of platform you are using. And here we are getting it from the interbank treasury, the codes, and you find the low against the currency pairs and also the high. And when they are set between 2:30 and 3:30 GMT, they are referred as the initial lows and the highs. And subsequently, they start making either an upward move to form a higher high or go below that of the low to form the lower low. So this becomes the base or the reference highs and the lows for the entire day. So if you are doing intraday trading, if you follow these lows and the highs, you will be able to really understand what the players are trying to do, whether they are trying to trap the short sellers or they are trying to trap the long holders. So basically the players make the market appear weak or strong and subsequently make opposite move. That is referred as the intraday trend reversals. So you do come across intraday trend reversals on a daily basis. So that intraday trend reversals you will be able to identify with the help of the lows and the highs. And also the next column shows the net change. So currently the net change in the case of euro is 33 pips positive. When it is in positive, it will be in green color. When it is negative, it will be in red color. Now for example, USDN is showing negative net change. USD CHF is showing negative net change of 29 pips. Whereas Euro and GBP are showing a positive net change of 33 pips and 12 pips respectively. Then the last column, the percentage change is not very important. Then the last column is time. It is given in GMT. So this GMT time, if you use to track the market, then you know that GMT time is a 24 hours time frame. It does not have a daylight saving system and things like that. So you will be able to easily understand how the players are making the moves in different sections of the day. Then once you understand their strategy, then it is easy for you to play along with them. Otherwise, you will continue to get surprises when they make a quick rise or when they make a quick drop. So ultimately, what can happen in the market? There can be a drop or the rise in the respective currency pairs. Euro, GBP, USDN and USD CHF are the majors, and they are the main currencies which are being moved up and down. Sometimes you will find similar to what you come across now as the USD weakening move. Euro and GBP are positive and USDN, USD CHF and USD CAD are negative. AUD is positive net change. So you come across a general USD weakening move. So this sort of moves you will come across on some days. Otherwise, you may come across Euro and GBP rising and also USDN rising, USD CHF rising and USD CAD rising. That is referred as a contrarian move. So some pairs will be showing the USD weakening move when they rise, Euro and GBP, and the denominator currencies when they rise, that they will show USD gaining moves. So when some pairs showing USD loosening move and some other pairs showing USD gaining move, they are referred as contrarian moves. So when they make such contrarian moves, you can understand that they wanted to gain levels in the case of the respective crosses. Now you come across the European crosses like Euro GBP, Euro CHF and GBP CHF, etc. Then subsequently you come across the yen crosses, GBP yen, then Euro yen, Aussie yen, etc. So you find basically the European crosses and the yen crosses are being handled by making contrarian moves in the case of the majors. So ultimately, if you are watching in all the six pairs, the four majors and the two commodity pairs, the respective market moves, and these moves you can relate it to that of the net change from that of the previous day close, how much they are raised or how much they are dropped. Now in the case of Canadian dollar, they are showing 57 pips negative net change, and in the case of Australian dollar, they are showing 45 pips positive. So they are not moved, even though they are showing, both of them are showing USD weakening move. You find variation with regard to the net change. Australian dollar has gained only 45 pips, whereas Canadian dollar has dropped about 57 pips. So in the case of euro, they had raised about 29 pips. In the case of CHF, they had dropped only 26 pips. So you find a slight variation with regard to the pip change. And also in the case of USD you find only 9 pips negative. So you can understand that they are trying to make differential variations with regard to all the currency pairs from that of the previous day close, and thereby they are able to either make a move closer to that of the high or closer to that of the low, whatever it might be. Say for example, in the case of Euro GBP, now current level is 89.71, 89.92 is the high, so they are trying to make swings closer to that of the high. In the case of GBP yen, for example, 148.08 is the current level, 148.51 is the high, net change is negative, and they are holding it near that of the high and making swings. When the net change is negative and still they are holding near that of the high, then they wanted to make a drop again. So how the drop can be? They will drop Euro and GBP and also drop USD yen. Then you will find Euro, GBP yen and Euro yen will also make a drop. That is what they have shown during the gap time before the start of the Japanese session or the Asian session. So they made a deep drop in the case of GBP. So current level is 64.51 and they dropped it to that of 63.48, and 64.41 was the closing level. From there they dropped almost about 100 pips, and in the case of yen it closed around 90 area and they dropped it to 89.20. So when they dropped GBP as well as USD yen, then you find a phenomenal lower level low was formed, 145.83. Then subsequently they raised about 250 pips straight to 148. So this is how month beginning they make a deep stoppance. So I will come to that of the forecast. So in the live market code page, what is more important for us? The low and the high and also the net changes. So with the help of all the three parameters, we will be able to identify what could be the possible move during the next 1 hour or next 3 hours and things like that. That can be estimated by looking into that of the live market code page alone. So in the chart, you find they are linearly displayed with regard to the time, but in the code page you come across they are vertical and they are in the same level. You come across up and down moves in the live market code page, and the past level is not very important for us. Actually, whether they are closer to that of the low or closer to that of the high are important for us to take a trading decision rather than how exactly they handle the market about 6 months back or 1 year back or 3 months back or 1 week back, etc. That may give an insight for us, okay, it is an ascending channel or a descending channel and things like that. But ultimately, when they are going to reverse it, and when you are doing a swing trade, you come across intraday trend reversals. And these intraday trend reversals are vital for the swing trades. That is very important for us to understand. Now, with regard to the forecast, the expected market moves during this particular session and also the rest of the day, Japanese session a drop quickly and then swing moves. They are swinging near that of the high now, and sporadically they are making a upward stop and in that of the high of Euro or GBP. And in the case of USD they made a very big drop and subsequently made the rise, and it is expected to drop again during the US session to that 89 area. Keep in mind, and when GBP or USD come closer to that of the low, you can initiate a buy order, but not now. Then quick firm up till mid-European session. So there will be a quick rise, and during that they may cut the high and go above in some pairs, or they may just make an upward stop and then hold near that of the current high. In the case of Euro 1.4770 and the case of GBP 1.6474, and they may make a stop of 30 pips or 35 pips, and subsequently they are expected to make that drop from that of the mid-European slide. So you will find that the gains in the levels will be very quick, but the drops will be very, very slow. Now, during the start of the Japanese session, all the pending orders, they made a downward stop and subsequently made the rise, because many people would have taken buy position towards close of the US session on Friday, and their stops are being hit, and subsequently they made the rise, and now they will try to make an upward stop and then subsequently drop. It is month beginning, so you will come across big volatile moves in the market. Keep in mind and trade with the hedging. Otherwise, whether you do a buy and sell trade or a sell and buy trade, there will be a possibility the stop being hit. Swing and firm up moves are expected during the US session, and during that particular session, you will find the contrarian moves are going to happen. So, Euro and GBP dropping and USD yen dropping, or Euro and GBP rising, USD yen is rising. That sort of moves will be shown during the US session, and in that process, big moves are expected during US session in the case of yen. Keep in mind. So, month beginning volatile moves are to prevail. This is the month beginning, new month. So, they will initially make big volatile moves. And you also know that it is the penultimate month, and after that December will be the year end. So these 2 months, you know that gradually the volume diminishes in the market. So before the diminishing of the volumes, those who are holding pending positions, they will try to make massive up and down moves and hit the stops and try to attract margin call for such holding people and try to earn desperately from that of the traders. So there will be big moves for the year end. So keep in mind that they are going to make massive moves. So you try to do intraday trade by taking a buy position whenever there is a very quick drop, and try to book profit whenever there is a quick rise. And that sort of trades, if you try to do it, you'll be able to get about 200-300 pips profit in a single day. But you need to understand that you are participating in the right direction of the market. Otherwise, the loss can also be 200-300 pips if you try to trade without a stop. So, for the month beginning, false volatile moves are expected before further drop in this particular week. So, what is expected during the month of November? Till second week of November, or at least by mid-week of next week, that is till about 11th of November, you will come across the USD gaining moves will be seen. And as you see, suddenly you will find USD gaining might happen, and they may call it as a risk aversion on one side. On the other side, they may say that really US economy is improving, so US dollar is gaining. That sort of moves, interpretation they may give, but ultimately USD is expected to gain till mid of November, till 11th of November, and subsequently you will find that USD losing it in a very big way till end of the year. So they are all the expected moves of the market. It is nothing to do with the US economy and nothing to do with it of the adverse condition or a favorable conditions. They are all nothing but the hypes created in the market, and the interpretations given for various data releases, etc. And ultimately, the players are going to make this sort of moves. And so how we need to understand the players' move beforehand. So that is why I developed the algorithm. This algorithm is able to give what could be the possible sentiments of the traders and what could be the opposite sentiment of the players, and how exactly the players continue to create the sentiment and act against the traders. And this is how I developed the algorithm, and this algorithm is able to give the massive market moves during different seasons and also during different years. And so with which, like a calendar, I am in a position to derive the expected market moves for multi-years. And it is similar to that of the multi-year calendar can be prepared. And there are many people having that question. I don't have a crystal ball, so it is impossible for us to give any prediction beyond certain time frame. Or we can just say that, okay, it can rise for about 1 or 2 months. Beyond that, we do not know. And if we have the perseverance and if we have the determination that we need to find, so nothing is impossible in this world. Only thing is we need to put in hard work to find how exactly we will be able to find the time frame associated with it of the market. So if we start thinking that it is not possible, it is not going to be really possible for us. And when people think that it is not possible, then they are not going to be innovators. And so many innovations and so many advancements that have happened in the field of medicine, in the field of education, and all other fields. How? Because people started questioning and tried to explore the answers for those things. And that is a research attitude towards the market or research attitude towards any particular question. So that is more important. So the inquisitiveness of a person will be able to really trigger him to find the evidences and try to do the back testing of such evidences and try to find how exactly we will be in a position to predict the market. Why I am giving this particular information here? Because it is being recorded, and I want people to really kindle their mind and make their mind think about the market, so that they can also find certain new ideas pertaining to the market. It is not that I am glorious and I can only find, and everybody has got the potential. Only thing is we all need the trigger to develop the research attitude towards market in an objective way without any subjectiveness. Then with regard to the market timings followed by the players, the Japanese session starts by 0030 and ends by 7:30 GMT. And today onwards, you will come across the regular timings, and the daylight saving systems are off in Europe as well as the US. So obviously you will find the time change, and this is the time you are going to follow till March, when the daylight system is going to be incorporated again. So 0030 to 7:30 GMT is the Japanese session. 7:30 to 8 GMT is the gap time before the European session. 8 to 14 GMT is the European session. Gap time is 14 to 14:30 GMT. Then US session is 14:30 to 21:30 GMT. And the gap time after the US session is 21:30 to 0030 GMT. The gap time moves are false move. I have shown it during the tracking the market together, demonstrated how exactly they are false moves. And there are certain days you may not come across very big moves. If there is a data release after the start of the US session, say for example by 14 GMT, then there may not be any move during the gap time. Similarly, if there is a tick data release around 14 GMT, then there may not be any big moves. Otherwise, you will find invariably the gap time moves will be false move. And if they drop during the gap time, you can understand during the US session they intend to rise, at least for the first 30 minutes. So with regard to the highs and the lows set for here, and the low in the case of Euro is 1.4684. Many people will be thinking that this is revisited, it's a double head formation, and subsequently there could be a rise and things like that. And they are going to create confusions for such analysts during the month end and month beginning times. The high is 47.70 and the market is closely holding near that of the high. There might be an upward stop above that and subsequently they will drop. And during such upward stop, when the market is very quick, if you try to take a sell position, then you will be able to quickly book profit. Rather than simply you see the market is holding here and so why not I take a position here? It is not, the euro doesn't look like it can rise further or it looks very heavy or it might drop. If you think all those things, you are creating your own sentiment without understanding the market sentiment. Then you might find the positions making loss and things like that. So whenever there is a quick upward move, you see that it stops cutting the high for more than 10 minutes. Try to take a sell position. You will be able to quickly book profit during the drop. During the drop, try to keep stop at entry and eliminate the risk. Then subsequently maximize the profit. Then also you found that quick drop to form 1.6348 as the low in the case of GBP and subsequently rise 1.486474 is a high and it is holding near that of the high. And the net change in the case of GBP is 13 pips and the net change in the case of Euro is 33 pips. So they may come closer to that of the high. They may not cut the high in the case of GBP, but they might cut the high in the case of Euro because the net change is more there. That means they intend to rise Euro GBP more, make an upward stop and probably reach above that of the psychological level 0.90 and subsequently drop. So this is how by finding the variations with regard to the net changes and also the negativeness of the net change and the positiveness of the net change, you will be able to read, okay, what they are going to do. You just watch and calculate. You don't even listen to me. And find the net change, how they change the net change and bring in various type of market sentiments. Then you will be able to really appreciate, okay, the live market code page is the real tool for trading rather than trying to derive the mean values, and those mean values will invariably say that extreme levels are noises, but they are the most important thing for us. And during such a now in the case of GBP, they formed an extreme level 1.6348. If you see the candle formation at that time, it will be shown as a big noise or a single straight line. But that is more important to hit all the stops. That is the level we have to take a buy position to quickly book profit. But invariably, you just discount it as a noise. So by averaging things, you will not be able to achieve anything in our analysis. And every level of market move is important for us because that is how the players play in the market. So you cannot simply ignore it or try to derive a standard deviation out of it and say that, okay, this is what the expected deviations. But the absolute values are important. And there are certain places where the absolute analysis is essential rather than a derived analysis. Anybody who knows the statistics will be able to understand that. And USD-CH, 1.0219 is the low and 1.0277 is a high, and they are now trying to go above that of 1.0250 so easily, and subsequently they are expected to rise. And in the case of Euro, they have made a net change of 34 pips now, and in the case of CHF, it is only about 30 pips negative, and it is lesser than that of Euro gain. So you can understand that they wanted to dip less and rise more in the case of USD-CH. And Yen, today as I said, that they are going to make a big move in the case of USD-Yen because they wanted to rise above this, and before that they want to try to hit all the stops here and probably give that impression to the traders that, okay, 92 is the capped level and afterwards it can go to 89 or 88 and things like that. So when the traders holding the long positions liquidate for the year end, they will try to make a massive move in the case of USD-Yen. And they have been expected to rise USD-Yen above 100 for a long time, and they have been consolidating. One of the reasons could be the low volume in the case of Yen, and subsequently they wanted to earn more money in the case of the Yen crosses, more than that of Yen. And the third important thing is, from Japanese banks, many of the corporates have borrowed money when the interest rate was 0.10 and almost no interest condition. And at that time, USD-Yen was trading around 124, 120 and things like that. So the repayment is now commencing. So obviously they want to keep the yen very strong, so that instead of interest, they will pay the differentials with regard to the rates. And that will be much more than that of the interest. So this is how in the financial market money makes money. So obviously you will come across cunningness involved in all these strategies, and probably it was shown apparently that the lowest interest rate is available in yen, why not you borrow? Then yen becomes very, very costly for you to repay. Similar to that of what we have seen it as a carry trade. So even a child or Japanese housewife can do a carry trade, just borrow money from the bank and try to buy euro yen or GBP yen, and you will see the profit. That's how they showed it, and subsequently they made a big drop and made those Japanese wives to pay through nose the money to that of the banks who have lent the money. So in the case of USD CAD, you find 1.0775 is the low and 1.0868 is the high, and the net change is now negative 54 pips, and you find that USD CAD has come out of the threshold conditions like 1.01, 1.02 areas, and it has come to 1.07 area. And in the case of USD CHF, it has not come up that much because they wanted to handle the CHF CAD cross, and subsequently they will rise USD CHF also. They handle one by one the crosses, and during that they make moves in two currency pairs at a given time. And if you watch the live market quote page, you can understand from time to time what are the two currencies they are moving. So today, during the start of the Japanese session, they moved GBP as well as USD yen quickly. So like that, two currencies they will make a move and subsequently reverse. So if you watch the live market quote page, suddenly you will find that there are such moves in two currencies. It's easy to relate it rather than looking at a single chart or looking at all the charts and trying to figure out. When you are doing analysis in one chart, the other moves will be happening in other currency. Whereas if you see the quote page, you will find, okay, these are all the two currencies they are handling, so let me take positions with that. So you will be able to take such decisions. So let me minimize the PowerPoint presentation and display the camera in the live market quote page. You can view it, and meanwhile I'll read the questions and answer to those questions wherever possible. Okay. During start of Japanese session, Smith has got a question. During start of Japanese session, there is a significant downward stop and was seen. Significant downward stop and was seen after the big rise in euro and GBP USD yen, which false move for the week beginning. Yes, and this is basically they made a false move to hit all the stops of those who had taken the positions on Friday. It was closed. And obviously in a thin volume condition, only the stops or the pending orders are being placed. They made the move to hit the stops. And probably at that time, many would not have just placed orders. They will just get stunned and become surprised to see what sort of move is happening. Before that, they just reversed it. This is what happens during the gap time between the close of the US session and start of the Japanese session on a daily basis, and that too on the week beginning. And it will be Sunday night for US people, and they will invariably see such surprises. Okay. Can we say that the USD yen reached the low and it is starting to rise again? They will try to revisit the low, and see the players make circular trades and make such level. And if you see that they are slowly making a dip in the case of USD yen, and so when they make the circular trades, and so obviously one set of people should be selling at the lowest level, another set of people will be buying of the same group. So obviously those who have sold it at the lowest level would have lost the money now, and the highest level, and those who have bought at the lowest level would have booked profit or would have seen a big profit after the rise. And they have to do the cycle again, so that those who have sold at the lower level will again buy against that, and subsequently they will take out the market. So this is how the circular trading strategy works. So then we call it as a double shoulder or double head formation and things like that. Okay, Roshan, did you say that the initial high and the low taken between 2 and 3:30 are reference points for the entire day? Yes, they are the reference points for the entire day, and that's how the players take it. So whatever they take it, we have to take it in the same way. So if you are speaking in French, then I need to learn how to speak in French. Only then I will be able to understand your speech. Can we expect new daily high around 1.48 for euro and sell around those levels? Yeah, there is a possibility they can make an upward stop, and probably they may go up to that level of 1.477 or 1.4797 and subsequently drop. Or if there is a need, if there are stops above that of 1.48, they may just try to trigger the stops and come down, but they may not sustain above that 1.48 for a long time today. Okay. When to apply 10 minutes to 30 minutes rule and when to apply 30 minutes to 2 hours rule. I explained BJ this earlier sessions also. Whenever they cut the high and come down below that, whenever they cut the high and stop cutting the new high for 10 minutes and come below that of the current high 1.4770 in less than 30 minutes, that means it is an upward stop. So the first 10 minutes they will try to cut the high and they will hold near the high, stop cutting the high and come below that of the earlier high 1.4770 in the case of euro. Then that is a stop and that means an upward stop and before a drop. So then you apply 30 minutes rule and 30 minutes to 2 hours rule. So when it cuts the high and stay above that of the high for more than 30 minutes, so they stay above 1.4770 for more than 30 minutes. They form the high, and how you will be able to identify? They will form the high in 10 minutes, 1.4780, then subsequently cut in 10 minutes, 1.4784, then cut again the high in 10 minutes, 1.4797, and stay there for 30 minutes. That means you have to wait for 2 hours because they will try to cut the high, swing in between the new high and the old high and try to trap the traders, and they will make a quick drop, that is to dump their buy positions, and in that process quickly people will think that it is reversed, so they will sell and they will try to hit the stops again of them, the short sellers, and make another cut of the high. They will try to do 3 times that way, 1.5 hours. And the last 30 minutes, they will stop cutting the high, the new high, for more than 30 minutes. That means the traders are those who have turned short, have turned long, cut the shorts and turn long. So once they have turned long, obviously there is no point in giving profit for them. Then they start dropping it. So there you apply 2 minutes rule. Able, this morning you yen crosses were weak, so when you say mid-European session slide till close, did you mean you expected drop further than at start of your session will swing up, and it says that then the low not cut and can take a buy position. So in the case of USDN or USDN crosses, don't try to take any position now. You wait for the drop, and when they come closer to that of the low, then you try to take a buy position. So it is simple. Intermediary level, don't try to take any position. Then you will find it much more easier rather than complicating your studies. Because once you make your study very simple, only then your trading decisions will be very accurate. If you make your study very complicated, obviously it will give various type of signals. Then invariably you will not be in a position to take a decision whether to go with the trade or not by the time the market would have moved. Or are you saying that the best time to take a position is within 30 minutes of each session? No, you wait for 30 minutes from the start of the session. 0030, wait up to 1 GMT. And if they cut the high or low, then wait for 2 hours. Then around 3:34 GMT, when they settle near that of the low or near that of the high, new low or the new high, then try to take a position. In the case of European session, the session starts by 8. Wait till 8:30 GMT. When they are not cut the high, then try to take a sell position around 8:10 GMT. And if they cut the high, then wait till 10 GMT. Afterwards, try to take a sell position near the high or a buy position near the low. Then you will be able to see profit within the same session. That is what I had demonstrated in Tracking the Forex Market Together webinar on Friday. Oh yeah, there is a mistake in type of mistake. 90.22 is the high. Is the current position of USD and 89.98 is a good position to take? Yes, no. I will not agree to sell when there is a drop, because you might think that you are trying to go along with that of the trend, but quickly they will reverse, and if they rise above that of your sell level, you become panic whether it is going to drop or things like that. You have to so after the rise, if you take a sell position, it is easy to book profit as a small trader. If you are an institutional trader, then obviously the trading strategy will be different. But if you are a small trader, when a rise has happened, after completion of the rise, you try to take a sell position, then you will be able to easily keep stop at entry, and your conservation of the equity is equally important rather than risking it in the market. So don't try to do such sort of sell and buy trade when there is a drop. And similarly, during a rise, don't try to buy. Looking the live market quote page, how can you take which pair they are handling? So you will find that suddenly the net changes. The column in the net change, they change very quickly. And you will be able to see that when Euro and GBP are initially making about 30-35 pips net change positive, suddenly GBP came lower, and it came to that level of 0.0001, and whereas Euro was holding around 35 pips positive. So you will find that, okay, GBP, they are handling it. Along with that, what is the other currency they are handling? If you notice it, Australian dollar is also making such quick moves. So because it is Australian market is very active, so Australian dollar, they will try to make up and down move, and they now come closer to the high, and they have cut the high in fact, and they are trying to rise. So you will be able to understand that such currencies, when they move, then GBP AUD currency will be very active, and yen, they have cut the psychological level 90 and gone below, and Euro and CHF, they are holding it, and also Canadian dollar 54 pips net change negative is holding. So these are all the two currencies, GBP and Australian dollar. They are handling it. This way, by looking at the net change, and whether they are closer to that of the high or closer to that of the low, you can identify what pairs they are handling at a moment. Why is that GBP USD does drop as much as Euro USD? Yeah, the volume in the case of Euro is much higher when compared to that of GBP. That is why it's easily, it becomes very easy for the players to make up and down moves in the case of GBP, which is less traded when compared to that of Euro. So in order to create market sentiments, they try to make the moves in less traded currencies, so that they have to make less investment and still create a sentiment in the market. Okay. LIC. How can we effectively trade the false moves before data? See, before data, they are expected to make a false move. If the data, irrespective of the data release, the timing is used as a trigger level, trigger time by the players. If they make a drop before the data, understand it is a false move, then try to take a buy and keep a hedging order of 45 pips or so. And once the position makes profit, try to keep stop at entry or quickly grab profit as soon as the data is released in the rise. And subsequently, nowadays what they are doing is they are making volatile moves after the data release, because the traders commit the positions after the data release. So ultimately their objective is very clear, making money from that of the market. But we are only worried about the data and what is going to happen to US economy or European economy, and try to tend to listen to all sorts of rumors. But they are the one creating the rumors and creating the market sentiment and act against the traders. So if you think that they are cheaters and they are cunning, then obviously you will not listen to them. That is the most important thing. If you develop your mindset that way, then you will focus on the market and you will also try to earn money from the market. Regarding AUD, can we still expect a drop to 88 area? Yes, it is expected in this week or next week. Do you see still GBP and Euro dropping? Yeah, okay. More than Friday low? Yes, they are expected either today or tomorrow. The drop for USD Yen expected during US session? Will cut today's low set. Yeah, they're expected to go near to that of today's low. At the time, probably you can take a buy positions. I think I had taken 10 minutes extra. So I'll not be able to go through other questions. So let me show the slide again. So the forecast for today, Japanese session, drop and then swing moves near that of the high. Then subsequently quick firming up move till mid-European session, and then slide till close of European session. And again a quick rise during gap time and also the start of the US session, and then drop. Camera is not there. So Japanese session drop and swing moves, quick firm up till mid-European session and slide till close. Swing and firm up during US session. These are all the part of month beginning volatile moves. And subsequently, after the false volatile moves, we are expecting drop in the case of Euro and GBP till 11th of November. And subsequently, you'll find Euro and GBP will gallop like anything. So I take this opportunity to thank everybody who has come here to listen to the Asian session live market analysis. I'll again meet you all by tomorrow, same time, between 5 and 5:30 GMT, and review what has happened today and subsequently give the expected market moves for tomorrow. See you all. Thank you for attending this. Thank you, FX Trade.